Why are there so many mixed opinions about whole life insurance? On one side, we hear that it is the worst area to position money. On the other side, we hear that the elite, ultra wealthy, banks and corporations position boatloads of cash here. So why are there two opposite ends of the spectrum? I'll share a story that will certainly speak to this point. When I was early in my career in the industry, 2012, I'm 24 years old, barely making any money. I made $8,000 for the entire year. It was my second year in the industry, actually. My first year, I made $5,500. But I'm struggling, and I'm working at a firm that primarily sold whole life insurance. And one day, a doctor comes into the office. He has a meeting with the owner of that firm and a senior agent there. And he had done some research on whole life insurance, the doctor, and he saw the cash value benefit. He comes into that office, and before anybody says anything to him, he says, I want to put $100,000 per year into this policy. He was interested in the cash value. Now at the time I hear that and I'm like, whoa, like this is awesome. Like somebody wants to put $100,000 per year into a policy. I'm 24 years old, struggling. I'm about to fail out of the business, but I hear that story. Here's what happened though. He bought a policy that was just a horrible deal. He put $100,000 in and had next to nothing in cash value right off the bat. That policy he purchased will take north of 10 years just to break even. So when we hear these horror stories about whole life insurance where people just lose money putting it there, that's a great example. And the reason why he put $100,000 into that policy, had nothing to show for it right off the bat, took several years to see any value build up in the cash value, which is what he was interested in. Like why? Well, all of his payment, that $100,000, went toward the insurance premium. Bought a death benefit, and the cash value eventually shows up. What many people are not aware of, and here's the key on this, to get the good stuff, copy what banks and the elite, the ultra wealthy do, is when you pay money in, if it's $100,000, if it's $10,000, whatever, you can choose if money goes toward insurance premium, which first buys you death benefit, just like that example of the doctor. Or you can choose if money goes directly toward cash value. Money that goes directly toward cash value, toward different riders on the policy, will show up in cash value. That's money you can access. That's money that begins to compound. This is the key to maximizing the cash value component of a policy. And what is so interesting is when you look at what banks do with these policies, specifically how they structure them. If a bank makes a $10 million deposit, they see that $10 million on their balance sheet in cash value. Their death benefit is much higher than that. Typically it'll be 25 to 30 million, but they're doing it for the cash value benefit. So individuals can do the same thing. They just have to have the awareness or an agent willing to do that. Now, here's the big thing, which is why some people see this and some people don't, is when we set that policy up, when I say we as an agent or an advisor, money can go where? Toward the insurance premium that gives me life insurance first and then cash value eventually, or directly toward cash value. If you were to guess, what drives the advisor or agent compensation? Dollars that go toward the insurance premium. So if we're going to minimize the insurance premium, which will naturally maximize your cash value upfront and long term, what will that do? That'll minimize the compensation, again, for the agent or advisor. So awareness has to be built there as far as, hey, how does this work for you? How does this work for me? How does this work for the insurance company? Because it does work. There's definitely a lot of truths to it. However, there's a lot of people that have just got burned with these products, and it's almost always due to a lack of awareness. Just if I could have everything transparent up front, what do the guarantees look like? What's my actual cash value look like? And then decide, hey, the growth isn't strong enough. It's just not for me. Or that's fantastic. I want to move forward. This way we see everything up front and can make an educated decision. So I hope that you found this helpful. Would love to connect with you. Feel free to reach out anytime and we'll talk to you soon. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.